Markets in 3 minutes. Welcome back, guys. Today we got the FOMC committee, 8 p.m. Central European time. They're gonna decide upon the interest rate moving forward. Will we finally see another rate cut? I might say pretty much not likely, not expected, and why this might be a harm for markets, we'll explain right now. We're looking at the Nasdaq index, and the Nasdaq has kind of been rising. We've seen after this recent drop a sharp rebound, and this rebound now might take the market towards higher levels if only this technical resistance zone can be broken. This seems to be quite unlikely for the time being because a rate cut, as said, not expected. The US dollar remaining stronger, pulling the market back to slightly lower levels. Plus, by the way, we have kind of done quite a bit of a sharper increase in this market so far for the year. So expect the markets to potentially kind of weaken for now, especially if there is no rate cut going to happen, as this might kind of harm market motivation. Next one up is Bitcoin. And Bitcoin has been following the Nasdaq in particular. If the tech markets, especially the tech exchange or the tech index, the Nasdaq has been, or when it was rising in the past, Bitcoin was following suit. And that's currently also the case. And exactly that is what we can observe in markets here right now. We are still getting and being stuck just at this technical 110,000 US dollar resistance level, which might call for some further weakness. The general trend has not changed, actually, and that's the tricky situation here, as the market momentum based on monthly charting patterns might still call for another break to the upside and might still call for Bitcoin to strengthen somehow, pushing this market to the upside. But first of all, at least for the time being right now, it's not expected, as short-term impact might call for slightly weaker levels to begin with. Slightly weaker levels in the dollar pairs, lowering basically the euro dollar, the pound US dollar, the Australian dollar, but also might cause some harm for the silver market. Now, we talked about silver last week and we said we sold an option, we sold a call, so we are short in this market. Strike price 37. Currently, the market is rising slightly above this level, but we can observe that this technical resistance zone might kind of call for weaker prices. And again, listen to what I said earlier on. The US dollar's strength might harm silver prices rising further, and any economic impact might also be a reason why this market might weaken further. The trend line looks sharp, the trend line looks solid, so we are kind of in our short side of things and in our short trade for now. Remain short until then, until the next video. See you then, guys. Take care. Ciao.